Say the sample P&L that you are seeing on screen, you can picture this as any business. Since we started with an example of smartphone business, let's continue with that example. So my sales revenue from the sale of the smartphone, and just picture that it's been little time that I started my business and now it's all running fine. So I'm able to earn 1 million from the sale of a smartphone. So this is my sample P&L. I earn 1 million. My production cost is 300,000. My research and development cost is 200,000. My sales and promotion is 60,000 and my office administration cost is 40,000. And this is just a simplified P&L. So I'm ending up with a profit of 400,000 at the end of the year. Let's say this is my current year, 2023. Okay. So let's say 2023 has ended and my sample P&L looks something like this, and my net profit is 400,000. But there's also something that I continue to do along the year. I prepare something known as budget journal. Now, what is budget journal? Budget journal is, it can be a notepad, it can be a document, it can be a Word file, format can be anything, but basically it is a journal that you keep where you keep noting down all those input points that you are likely to incorporate at the time of preparing the budget for next year. For example, let's see what are my notes for budget journal for this year. Due to marketing efforts, my revenue is expected to increase by 20%. So, every year I do a lot of sales, promotion, and marketing and everything. So, this is going to reap benefits in next year 2024, and my revenue is going to increase, right? My salary and wage every year from if you are a corporate employee or if you are just a salaried person, you might also be getting the increment. That is mostly it's every year. So as a business, I also have to give increment to my business, and this is 10% salary and wage improvement inflation increment that is good I'm going to give. Inflation is expected to be around 5%, and this production cost, okay, this production cost 300k, right, that you are seeing, it has its own breakup. So this production cost consists of labor of 200,000 and material cost of 100,000. Okay, so this is my sample P&L for this year. I'm going to use these notes that I have noted down in budget journal that I'm going to use in preparing the budget for next year. But before we start preparing the notes for next year, I just want you to recap this budget journal, because this is something which can be asked in an interview question if you're applying for FP&A job. So if your interviewer asks what is a budget journal, you know what to say. It is a journal which is kept by the financial analyst or by the FP&A analyst to note down all the necessary inputs for that can be incorporated for preparing the budget for next year. Okay. All right. So with this sample P&L and these budget journal notes, let's see how I create the budget for next year. All right. So my sales revenue is expected to increase by 20%. So that's given, that's obvious that my sales revenue last year was 1 million. I'll increase it by 20%, and my budgeted sales revenue for next year would be 1.2 million. Production cost. If you remember the notes, the breakup of 300,000 production cost was material 100,000 and labor 200,000, right? Now I'm going to give a salary and wage increment of 10%. So the 200,000 salary that I paid last year, next year in 2024, I'll be giving a 10% average hike. So that's the reason that production cost of 300,000 I have broken down at 200 and 100,000. At 200,000 I gave a 10% hike. 100,000 my inflation that was also provided in my budget notes. So expected inflation percentage for 2024 hypothetically is 5%. So that's the reason material cost, while calculating the budget cost for material, I've increased by 5%. Research and development, assuming that salary for research and development is included in office administration only. So research and development, I've only included the material, etc., whatever equipment I need for research and development and all the other essential stuff. Inflation would be applied there. So at 200,000, I'll again give the inflation rise, which is 5%, and I'll end up with a budgeted amount of 210,000. Sales and promotion, again, assuming that salary is included in office administration. So this is just the material. I'll again, material or any other vendor payment that I'm making for sales and promotion, I'll I'll include the inflation percent of 5%. Office administration, last year it was 40,000. I'll be giving a 10% increment. So I've considered that also in this thing, right? Now, this was a simplified version of sample budget that we prepare next year. As an FP&A analyst, when you guys move into FP&A domain, pretty much more or like this is what you will be expected to do. You'll be expected to prepare a budget basis the inputs of the current year. Now, most of the times these inputs would not be provided to you on a platter. You'll have to keep a watch on actuals, on business, on whatever inputs you can during the calls from other departments, and maintain those notes in your budget journal so that you can incorporate them while preparing the budget for next year. When you prepare the budget for next year in this manner that I've shown you, you present it to senior management, to CFOs, or to department heads, but you also have to have your explanation ready. So if I have projected a revenue of 1.2 million next year, why? What are the factors that are leading to increase? Okay, why from 1.1 to 1 million to 1.2 million? If I'm projecting a production cost of 3.25, 325,000, why? Right? What? So these are the explanation you will have to provide. Now, with this, you get a sense of what is budgeting, right? Uh, let's say your budgeting cost for sales and promotion next year, okay, it's 63,000. But as you move along with, say you are now in 2024, and you've the first 3 months have passed, you now realize that you budgeted for 63,000 for sales and promotion, but the actuals are much higher. Okay, because when you budgeted, what are the features of budgeting? When you budgeted in 2023 for 2024. You budgeted basis the information you had. Okay, you didn't knew how things are going to turn out to be in 2024, right? You didn't have any actual information in hand. It was all a realistic and reasonable estimate. But when you step into 2024 and say, hypothetically, you've already crossed first 3 months, so you've ended quarter 1 2024, and you realize that your actuals are much higher than what you expected. So 63,000 you expected for the full year, but then your expense for first 3 months is 20,000. So now you know that you are going to end up with much higher amount than 63,000. So what you will do is you'll adjust that budget. Okay, you that 63,000 budget, you'll adjust that for rest of the year. Okay, so 63,000 for the whole year, that means for 1 month it was 5,250. Okay, and for quarter 1, for 1 quarter, it was 15,750. Right. So now you know that my actual is 20,000. In 1 quarter, I'm incurring 20,000. It is no longer 15,750 that I projected. So why don't I project 20,000 for rest of the 3 quarters? Okay, quarter 2, quarter 3, quarter 4. So my projection for rest of the 9 months would be 20,000 into into 3, 60,000. So your forecast for rest of the year would be 60,000. Okay, remember the term that I used, forecast. The initial term was budget. So the first plan number that you provided as an input to the management was budget. 63,000 that you that you budgeted in 2023 for 2024 was the budget number. But after stepping into 2024, after spending first 3 months, you realized that your rest of the year expense are going to increase, and there is no way you will end up at 63,000. So you revise your budget. Okay, and that revised budget is called forecasting. Okay, so for rest of the year, whatever budgeted you've adjusted, that adjusted budget is called forecast. Let me also explain you with the help of another example. Say you plan a trip for Goa. Okay, I'm coming to a little different example this time. But say you plan a trip to Goa and you budgeted for 50,000 overall. Okay, 20,000 for flights, 15,000 for hotel, and remain 15,000 for shopping. Okay, just three heads: shopping, flights, shopping, and hotel. Okay, this was your budget. But when you actually uh, went on to book tickets, you realized that flights are costing you not 20,000 but 25,000. Now what you will do, you only have 50,000 in hand, so you have to adjust your budget. So what you will do is you'll say, okay, I don't have any other option. I'll have to pay 25,000 for shopping, for flight. Let me reduce my shopping budget from 15,000 to 10,000. So my revised budget would be flight 25,000, hotel 15,000, shopping 10,000. So initial budget is called budgeting. The revised budget is called forecast. Okay. So that's the difference between budgeting and forecasting. Another most common interview question: what is the difference between budgeting and forecasting? Okay, don't just read through mug up at what's there in the internet and blurt it out during the interview. Try and understand the concept so that you can explain the concept to your interviewer and increase your chances of selection. So what is budgeting? Budgeting is the initial planned financial numbers that we incorporate basis our actuals of the current year. What is forecasting? Forecasting is the adjusted budget that we incorporate basis the actuals received of the budgeting years. Correct?